Welcome to the Houston Health, Life and Style podcast, authentic stories from inspirational people. Hello everybody, welcome to the next podcast. Today we're talking to Dawood Odeh from Unifi Capital. Now Dawood runs under the title, I should say, as mortgage broker. Dawood, welcome to the program. I'm going to get you to explain what in fact is a mortgage broker.
Thank you very much, John, and it's a pleasure to be on your show. Basically, a mortgage broker is someone that looks after all your, lending needs or lending requirements. So that could be a whole bunch of different things, not just a mortgage, but it is a mortgage for a home. It could be someone that helps you with asset finance, so a car loan, a personal loan, or even commercial and business loan if you run a business. So it's a wide range of things. And as a finance broker, we do look after all the lending and borrowing requirements you might have.
People might be wondering, why is a mortgage broker on the Houston Health, Life and Style? Well, I reached out to you because it is important. I mean, years ago, generations ago, a mortgage broker was kind of sort of untouchable. They were out there. But now, and I've been through this firsthand, if you seek the right advice, this can save you a lot of money. Now, money and stress, they go hand in hand. And let's face it, we live a very fast-paced life these days. For so many Australians, why do you think finances play such a big role in well-being in general?
Look, that's a very good question. And money and stress do go hand in hand. And it's because money isn't just about numbers and the amount of dollars you've got in your account. It's also about security and your personal freedom. So when we don't feel in control of our finances, the stress starts to show up everywhere. You get sleepless nights thinking about how you're going to cover your bills. You start snapping at your partner. You start having some health issues, and that could develop from a lack of sleep or bad eating habits because you're not in the right headspace to think about what you should and shouldn't eat. Starting to slip on your exercise habits. And I can say, I'm one of those people that when things do start to get very difficult, I'm an avid gym goer and I go 5 or 6 times a week. But it's easy for me when I am stressed to start thinking, do I really need to go 4 or 5 times this week? Maybe I'll just go 3 times or 2 times, and it slowly starts to slip. I'm also a big comfort eater. So again, if I'm going through some stress, I'll stop looking at what I'm eating and can easily slip into bad habits, which then start to affect your health. So this is why it all links back to well-being with regards to your finances.
Yeah, I must say it's reassuring to hear that Dawood Odeh is a comfort food eater.
Absolutely.
Now, for those of you who haven't seen Dawood's body, you'll know exactly what I mean here. I mean, if you can own that, I tell you what, the rest of the world is now in a safe place.
Absolutely. A box of Krispy Kreme donuts can go down like a treat. I was just going to say, the other thing is with, the finances, a lot of people tend to think that it's just the size of the debt. So, you know what, if I pay off my debt, then my health and well-being is going to be completely fine because I won't have that stress. But it really is the structure of your finances and not the size of debt that you have. I've seen people who've paid off their mortgage or almost paid off their mortgage, and it's down to $300,000-$400,000, and they're absolutely crippled by stress. Whereas I've got clients who've got a $5 or $6 million loan, and they're very calm. And the difference between them is that the person with that larger loan knows exactly where their repayments are, knows what the repayments are. They've got buffers in place. Their money's flowing through the right accounts, whereas the other person with a smaller loan is just winging it. They've got no plan, no buffer, and it feels like a shock. So it really comes down to that predictability. If you've got predictability, you know where the funds are coming to make to meet your financial requirements, then that stress disappears.
Yeah, look, I mean, and I'm sure you're the same, that the amount of relationship breakdowns that I know of, that I see, a lot of it's to do with money. And we put that stress on us. Now, if the relationship is that important, we really should be addressing this at the beginning. And I don't care what people say. And thank you. It does make sense. No matter whether it's large or it's small, it's still a stress if you don't plan and do it properly. Now, gosh, interest rates are so topical at the moment, and we've been waiting for so long for the drop, and it's timely that you're part of this program. People get excited with interest rate drops, I should say, and there's this almost unplanned approach to now we can afford it. Where do people go wrong at this point?
It really comes down to the planning. So, if your interest rate is dropping, you usually know how much your payments are dropping by. So, if it's an extra $50 or if it's $100 a month, it's all about planning what you're going to do with that $100. It doesn't mean you can automatically start buying that, extra coffee or buying that, It's about planning what you want to use that saving for.
Yeah.
And that's where that interest rate drop will be beneficial to you. If you don't plan and just start to say, okay, well, now I can spend because we've got that extra cash, that's where it goes wrong.
Okay, well, the two messages I'm getting so far is plan, 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 and strategize with your partner or with yourself or with your particular broker. And the other thing is, it's okay to be a comfort eater.
Oh, absolutely.
I'm going to keep coming back to that.
Without it.
Dawood, if someone's feeling stressed, I guess, about their mortgage right now, but they're listening to us and they're going, hell, yes, that's me. I guess, what are some of the simple steps that you can suggest right now to the listener that's thinking that?
Yeah. So if you're stressed about your mortgage, you need to, I guess, look at a few different strategies. It's what you can do very quickly now to improve the now, and then start planning for your future. So one very important thing is to start budgeting if you're stressed right now. Because a lot of the times we tend to see when we're not budgeting, we've just got, small payments going out here and there. So right now with subscriptions, for example, everything's a subscription. If I look at my bank account, there's quite a lot of, $10 here and $5 there and $13, and all of that begins to add up. So I personally hate budgeting, but when I am stressed or when there is some, I guess, difficulty meeting repayments, it is important to do that budgeting and just split your finances into, 3 separate buckets. You've got your essentials, things that you can't live without, things like bills that you need to pay. Then you've got your lifestyle expenses, where that's the one that you can vary depending on how much you've got available. And a really important one, I think, is a bucket for your future. So what your plans are in the future, because you might be stressed now, but you need to start planning for what you want to do in the future so you can meet those goals.
I think also, I mean, really, no one likes to admit their mistakes, their failures, I guess, or the things that they're not really comfortable talking about. And to have to face up to some of these things, it means sacrificing in other things.
Absolutely.
And I think the importance is for people to know they're not being judged and that they're probably typical in this situation as opposed to unique. Am I right in saying that?
Absolutely. And we all go through these phases in our life. No one is always, cruising financially and happy. I've got clients who make, millions of dollars a year, who still go through times and periods where their finances are a lot tighter because they've got commitments that they need to meet as well. So there's no shame in it at all. We all go through these phases. It's not something that you need to be ashamed of at all.
And I think also, I mean, now with social media and the internet, and we have so much accessibility to knowledge, to sometimes the wrong knowledge as well, and we make assumptions. We tend to look at things at face value at times, and and there's that person that of who has the waterfront property and the investment property and the holiday house in the Highlands or down at the by the surf somewhere, and you think, gosh. But when you look deeper, sometimes that person is up to so much debt that they are literally treading water to survive week by week.
Absolutely.
And yet you would never know.
Exactly.
So my message here is don't judge. Don't feel like you're being judged. Make the step. Get it right. Talk it through. It's just like going to therapy or to a doctor, isn't it?
Yeah, absolutely. And look, sometimes it also is just a matter of restructuring your finances. So it's not only budgeting. So if you do have a mortgage in place already, another quick and easy thing to do is actually go and speak to your broker, because it could be restructuring that just frees up your cash flow. So, for example, if you've got a loan that you've been paying for 10 years, so it started off as a 30-year loan, you've got 20 years to go, you're making those repayments. If you actually go see a broker, they could potentially extend that loan back to 30 years, which will make the cash flow a lot less. Your monthly repayments are a lot less. They could set up an offset account for you as well, where any extra cash that you hold goes into that offset account, and that reduces the monthly interest you have. And all these things can reduce your monthly repayments. Now, yes, a lot of people will say if you extend your loan back to 30 years, that means you're starting from scratch again, and it's going to take you 30 years to pay it down.
Yeah.
But it might just allow you to have some extra cash while you're struggling at the moment. When things do get better again, you can go back and choose to make the repayment you were making previously, and that will speed that repayment on. So it's not necessarily you have to pay it for the next 30 years.
And it's like with anything, you go to someone who specializes in what they do. Like the doctor is there because they specialize in medicine. The accountant's there because he specializes in finance. You're a real estate agent. You have different representatives that have different skill sets. And I've said this to my own kids as well, is that they've just been through the scenario. I said, go and talk to a broker, because they are the ones that actually have the latest information. And policies are changing all the time, aren't they? I mean, what's right in one week could be totally different next month. Yeah, and unless you have a professional, you just don't know this stuff. And I love the way you say you will save money by going to somebody who has that skill set.
That's right.
Yeah. Look, mental health, we talk about stress and money. They go hand in hand. I believe in, and including you're backing that up there. We all have mental health. That is what it's part of who we are. It's when mental health becomes, I guess, irritated, and I use the word irritated, or engaged. It's having that balance. I guess for the financial well-being of somebody, is it deeper than people realize? Like the mental health issue that is attached to finance?
I definitely think so. So money stress is one of the top reasons that couples argue. It creeps into everything in your life, sleep, mood, productivity at work. So it's definitely something that, I think links to your mental health. When your finances aren't structured, as we mentioned, that stress creeps into everything, and your well-being in general starts to reduce. So just back to that, I guess, initial question that we had, it's all about your predictability. If you are able to have your finances sorted, and you know what you'll pay, what bills you've got, what expenses, what loan repayments you've got, you've structured it in a way where you make those payments first, and then you can spend what the rest that you've got. That definitely helps. So I had this one client recently, and this is not a service that a mortgage broker typically provides, but when we do see our clients struggling, we do try and help where we can. She came to me and she was juggling repayments across different accounts and never really sure if she had enough money to get through the month. She would get paid on a monthly basis. So all we did was just simplify her setup. So we had her salary go into an offset account. We had all her repayments for all her other bills also come out of that offset account. And we just aligned those bill repayments and her mortgage repayments to come out as soon as her salary came in. And then from there, she knew what money she had left, I guess, for her lifestyle expenses.
Yeah, yeah.
Again, all about structuring it. And she called me after that, 2 or 3 months later, and said, she wasn't wealthier all of a sudden, but she called and said, I just feel so much lighter because I've got clarity now.
It's interesting, isn't it? You say lifestyle expenses, and so many people put their lifestyle expenses before their have-to payables. And that's what you're talking about, isn't it? And that's where we begin to strife. Yeah, yeah. Can you just define, because I know there is a difference between a mortgage broker and a financial advisor.
A mortgage broker looks at your lending needs, whereas a financial advisor will usually give you advice on how to invest your finances or how best to use your money to allow for the future that you provide. Whereas as a broker or a mortgage broker, we just look at the lending side of it.
Yeah, and I think it's fair to say there's a legality attached to both of those roles. Is there? Just define that, because I know some people are confused by that.
Yeah, so as a mortgage broker, we don't have the authority to give you financial advice. We can't say, if you put your money here, this is what's gonna you'll make this much money. We can't give you that advice. You need to see a financial advisor for that. As a mortgage broker, we give you advice on the specific loan that we're offering you.
Yeah, no, thanks for clarifying that. Dawood, we all have our own journeys, our own experiences. You've had yours. Do you feel that's shaped the way that you handle your clients, your own experiences, or are you learning from your clients, I suppose, as well?
Yeah, look, definitely always learning from my clients. I can't say that I've lived through every different type of, financial stress, but I have lived through quite a lot of different points in my life. I've lived through financial stress in different capacities. So, I was once a first home buyer, and it's the thought of, how am I going to save for my deposit and get into the first home and then start making those repayments.
That is something I'm hearing all the time. And I'm hearing about young people, but also people with kids that are getting into the market. They say, oh, it's impossible to get into the market now. And I mean, the lifestyle. And I say rubbish, absolute rubbish. You know what? There's a misconception, because I think people feel that they have to move into or buy a 4-bedroom house on the water.
Yep.
I mean, get over yourselves. Seriously. It's no different today.
The hardest part is getting into the market.
Yeah, I can remember when we started, it was a 1-bedroom apartment.
Yep.
1 bedroom, and then it went to the 2-bedroom. Then it went to the house. Then it went to the house that got extended, and so on. You take your time and you do your pitch. The same thing now. I know for a fact. One of mine's just bought a studio.
Yep.
So it's possible. It can happen.
Definitely.
So for anyone out there that says that it's impossible, garbage.
That's right. Speak to your broker.
You need to wake up and look at your lifestyle and understand where you can put your expenses and what you need, speak to your broker, because it is very possible. Am I wrong?
Absolutely not. And there are many tools that we can provide you to help in those stages of actually saving for a deposit. So that's that's definitely something.
In your opinion, what's the biggest misconception that Australians have about their mortgages or finance in general? What are they getting wrong?
One is, I guess, the biggest myth is that the cheapest rate is going to be the best deal. So that's something you always see people asking upfront, what's the best rate I can get? Or when they know I'm a mortgage broker, they'll ask, what's the best rate you can get now?
But why is that, though? Is that a natural thing to ask?
Look, I think that's what everything we hear in the media is about the rate. So that's what people think is the most important. And some people will, go and refinance and save, 0.5% somewhere, but then that's at, the cost of flexibility or what their future plans are. So the cheapest rate is not the best deal for everyone. Sometimes you need to look at what your actual life plans are, what you want to do, what your short and medium term goals are. And then based on that, we can recommend what the best product for you.
Yeah. Yeah.
Another, I guess, big one is a misconception that people have is that treating a mortgage like it's a static product. So, they may have got the best deal and spoken to a broker 5 years ago or 6 years ago, and they think, oh no, my broker recommended this, so I'm definitely on the best deal. But life changes. So what could have been the best deal for you 5 years ago is no longer necessarily the best deal. You could have had kids, you could have had a career change, you might have, plans to travel now that you've gone to a different stage of your life. So keeping the same loan for 10 years or, 15 years without adjusting it is just not the right thing. It's like wearing, a pair of shoes forever, even if they don't fit anymore and you've grown out of them.
Yeah. There's so many different topics that come out of this. And this first, and hence I want to tell the others, we're actually breaking this into a trilogy because I want you to come back and talk about the next phase and then the third phase. But I guess if there's one piece of advice that you could leave today about money and lifestyle, what would that be?
Stop separating money from lifestyle. They're one and the same. Every financial choice that you make shapes your freedom, shapes your stress levels, and the opportunities that you're going to come across. So really start small, make some small changes, whether it's, setting up an offset account or, refinancing to a loan that has one. Speaking to your broker every, 1 or 2 years, I say is the absolute most that you should leave between reviewing your loan, because making those small changes, speaking to your broker, letting them know what your new goals are and what your short and medium term, I guess, plans are, will allow them to structure the loan to work for you.
Yeah.
So at the end of the day, money isn't about having more in your account. It's about structuring it in a smarter way so that you can actually live more. That's a real win.
Yeah. I didn't even realize that people thought this, but it did come up in a conversation once, is that I was talking about the practice of a mortgage broker. And this friend I was talking to said, oh, how much do they charge? I said, what do you mean? Charge? Like, he thought that to have a meeting with a mortgage broker, it was at like an hourly rate. That's wrong, isn't it?
It's definitely wrong. And I guess the reason some people think that is that in the financial advice section or financial planning section, there is a fee to speak to get that advice. That's something that was put onto that financial advisory industry a few years ago. However, as a mortgage broker, the bank pays us. There are some cases where a broker can charge you what they call a mandate fee, and it's usually for very large transactions. So if, for example, you're doing a $50 million commercial development or something like that, a broker is going to put in a lot of work in that case. And if it doesn't go ahead, they would have spent hours, so they can charge you a mandate fee. But typically, if you're looking at, a standard home loan, a standard business loan or a commercial loan or a personal loan, the bank pays us once the loan settles. There's no cost to you as a customer. It also doesn't affect, some people think it may affect the rate. If the bank is paying them, then, that might increase my rate and that's how they make up for it. That's definitely not the case. About 65, almost 70% of Australians are now using mortgage brokers. So the banks need us. They need our business. If they are going to charge our customers more, then they're going to lose our business.
Yeah. And that's why I've reached out to you to be part of the program, because health, life and style, I mean, it all comes, it's all attached to money at the end of the day, and how much you have and how much you can afford. Now, the thing is, dumb it down completely by coming to someone like yourself at Unifi Capital. It's free advice. This is my scenario. The free advice could turn into saving you money, which could in turn pay for that European holiday next year.
It's usually hundreds of dollars that are saved when a client refinances into something else. And obviously, it's not, if you're refinancing every year, that's not going to be the case. But if you've left it for 2 to 3 years, you've you're going to a broker, they're going to reassess and restructure your finances, typically saving over $100 at least a month.
Yeah, there you go. Dawood, you're based in Sydney. Should one stick with a state-based broker? Does it matter, or what's the scenario there?
It doesn't really matter, and in particular, COVID has changed that completely. So we did have a requirement where we had to meet our clients in the past. Now with Zoom, with online video meetings, we can do all our identification that way. So it really doesn't matter. You need to find a broker that you can connect with. I guess that's the most important thing. I've got clients all over the country, actually all over the world. I've got clients who are expats working in different countries who are purchasing properties here. So it doesn't really matter where they're located, as long as you can connect with that broker. They understand the way your goals, your lifestyle. That's, I guess, my recommendation on who to align yourself with. And typically as a broker, we get, I helped one person in Brisbane when I first started the business, and instantly I had a huge, I guess, referral thing happening in Brisbane where, clients are referring different people to me. I've got a accountant who refers me business based in Wagga Wagga. So I've got a huge base of clients in Wagga Wagga now. So it doesn't really matter where the broker is. I always think it's just trying to find someone that you can connect with who will understand you, understand your needs and requirements. That's the most important thing.
To have that trust in a relationship with somebody who understands you, who's not going to judge, and we say that again, he's not going to judge you, but they understand what your requirements are and what your touch points are, because there's no point if you advise somebody based on what you think is based on your lifestyle and not theirs. It's not going to work, is it?
That's right. Not real.
Dawood, thank you for joining us today. And as we said, we have three parts to this particular topic. And what's the next session going to be on?
The next one is one that I love, and probably one of the reasons I actually decided to start Unifi Capital myself. It's about designing your dream life with finance. So, mortgages are more than just debt. A lot of people think, I just need to pay off my mortgage as quick as possible, and that's the goal. But mortgages can actually enable the lifestyle that you want. It could enable your dream lifestyle. So yeah, very excited to talk about the next topic and how you can actually use your mortgage or your finances to shape or achieve that life that you want.
Thank you for joining us, and I really appreciate it. It's topical. It's all about reducing stress, living a better life, and managing finances. You've been listening to authentic and honest conversations on the Youth and Health, Life and Style podcast.